I'm going to move back to the data set here, and I'm going to get rid of this chart so we're not looking at it. And what I'm going to do now is add some more columns to the table. Okay, so one thing you might be interested in is, well, what does the stock do when options expire? All right, so lots of strategies revolve around the idea that maybe the stock price pins or gets close to an option strike price on the expiration day. Okay, so the first thing we need to do is figure out when expiration days are. All right, and expirations, with rare exception, are the third Friday of every month. All right, in addition to the weekly expirations that we now have, and in some cases, I guess they have daily expirations. All right, but generally, I'm looking at monthly expirations here. All right, and if it's the third Friday in every month, I guess we could go through, and this is a small enough data set that we could take the time to go ahead and find a Friday, all right, and figure out whether that's the third Friday in a month. Okay, and we could go through the entire data set and do that. Instead of doing that, I'm going to write a formula that does it. All right, and I'm actually going to write a fairly complex formula. All right, and what we need to do is figure out first, is this a Friday? All right, and then we need to figure out if it's the third Friday. All right, when it does, I'm going to put a 1 here, and otherwise I'm just going to probably put a dash here. Okay, I'm going to need to test actually several things to see if it's the third Friday. And I'm going to start with the if function. All right, and there are 3 conditions that have to be met. First of all, it has to be a Friday. Secondly, it has to be a Friday that's possibly the third Friday, so we need the lowest date that it could be the third Friday in a month, and then we need the highest date it could be the third Friday in a month. All right, so to test several logical conditions, I'm going to use the AND function. All right, the first thing I'm going to do is look at what weekday is it. All right, and the weekday function returns a value between 1 and 7, with 1 being Sunday and 7 being Saturday. All right, and I'm looking for weekdays that are Friday, so I want it to equal 6. Okay. The next thing I want to do is figure out, well, what's the earliest date in the month that it could be the third Friday? And the earliest Friday that could occur on would be the 15th. Okay, so I'm going to peel off the day from the month. Okay, using the day function. And I want the day function to be greater than 14. Okay, so if it's a Friday, if it's greater than 14, and it is a day that is less than, the latest it could be would be the 21st. All right, so if it's a day that's less than the 22nd, well, then it must be the third Friday. All right, so if all 3 of those conditions are true, all right, I'm going to put a 1 in the cell. Otherwise, I'm going to put a dash. All right, and if I have closed all my parentheses, I should see lots of dashes, and then once in a while we should get a 1. All right, and we should just verify that this actually is a Friday, and looks like it must be the third Friday. It happened on the 19th. Okay, so I'm going to go ahead and get rid of the data that we don't need. All right, so we don't need these, even though there was an expiration Friday. All right, we don't have any of our volatility numbers to look at there, so I'm going to eliminate all these. All right, and then once we have that column, right, we can go ahead and filter it and just look at expiration Fridays. All right, and whatever you need to know about expiration Fridays. All right, we have, it looks like, 10 or 11 of them. Okay, we can see what what the changes were that day. Okay, we can see what volatility looked like. All right, and then maybe based on this, you might be able to develop some kind of strategy to trade on either the days leading up to expiration Fridays or on expiration Friday itself. Okay. All right. Okay, so other things you might be interested in are maybe how many days it's been since we've had a two standard deviation movement. All right, so first of all, I'm going to remove the filter. All right, and we're going to go ahead and take a running count of days to two standard deviation movement. Okay. And from this you might be able to say, well, it looks like maybe a two standard deviation movement is due. Okay. All right, so I'm going to again start with just the data that we're actually using. So we're leaving off the first 20 or so values here. I'm going to seed this in with a 0 just so the formula sort of makes sense when it copies down. All right, and what we want to do here is mark each two standard deviation movement day, all right, with the number of days that preceded it. Okay, so what I'm going to do is again use an if function, and I'm going to look at the absolute magnitude, or sorry, not the absolute magnitude, but just the magnitude, the actual magnitude of yesterday's movement. Okay, and if that is greater than or equal to 2, I'm going to mark it with a 1. All right, so this would indicate that it has been 1 day since a 2 standard deviation or better movement. All right. All right, so if, as in most cases it should be, this is not a 2 standard deviation movement, what I'm going to do is take the value right above and I'm going to add 1 to it. Okay. So when we copy this formula down, all right, we're going to get the number of days it's been since the last 2 standard deviation movement. Okay. All right, so we can see that, wow, it took a pretty long time before we had a 2 standard deviation movement, and actually when it did happen, it was a big one, all right, over 3 standard deviations. Okay, and if I go down, we can see that it happened again 32 days later. Okay, and it was 2.7. Okay. All right, and so then yes, we can go ahead and filter this, and we can get an idea of how frequently these 2 standard deviation movements happen. All right, and maybe that will tell us something. Okay, so I'm just going to filter this out, and I'm going to look for things that are greater. No, I'm not going to look there. I'm going to look over here, actually, sorry, in magnitude. And I want days where it's 2 or more. So greater than or equal to 2. All right, so we can see that that happened several times. All right, and most of the times, there was a lot of days leading up to it. All right, we can see that right here there were 2 right in a row. All right, so that's what that indicates. There was 2 right in a row. All right, and then there was one where, okay, there was a move, and then sort of a quiet day, and then another big move. Okay. And these are happening a little bit more frequently than earnings releases. Okay, so this one may have been around an earnings release. All right, this one may have been around an earnings release. All right, I'm not really entirely sure, but maybe it was. All right, maybe it was. The earnings came right around that time, and there was a big down move and then a big up move. But here we have on December 17th a big move up, and then on the 18th another big move up, and then just a few days later on Tuesday, it looks like, or sorry, the Monday following that Thursday big move, we had another big movement up. All right, so obviously we can do that with negative moves too. I'm not going to take the time to do that here. I'm just going to do one more thing. All right, I'm going to clear that filter out. All right, and whoops, I just select everything. I'm going to do one more. All right, and this is maybe a look at runs of positive or negative days. All right, so I'm just going to do the positive runs. All right, and then maybe, if the stock moves randomly and we're not sure if it's going up or down, okay, then any given day, the chance of it moving up or down should be about 50%. Okay, and then that's probably true until it's moved up or down several days in a row, and then we can probably have a better than even chance of betting it moving in the opposite direction. All right, so that's why I'm going to show how to do this. All right, and again, I'm going to sort of seed this in. All right, and I'll just seed with it was a negative day here, so I'm doing days positive. I'll put a 0 there. So what's going to happen is when we get a negative day, we're going to see a 0 or a dash here. Otherwise, we're going to see a 1 or higher. All right, and again, this is going to require an if function. It's actually going to require a nested if. All right, and so the first thing we want to do is look at whether or not the change is positive. All right, so I want the actual change here in dollars. All right, and oops, I got to start with an equal sign, of course. All right, so if this actual change is, and we're going to ignore the days when it's actually 0, so we're just going to leave those out. All right, so if it's greater than 0, all right, what we want to do is see if this is the first day it's greater than 0 after one or more negative days. All right, so when it's greater than 0, what I want to do is look and see what is right above it. Okay, so we're going to go ahead and look at this value, and if this is greater than or equal to 1, all right, we're going to add 1 to it. All right, otherwise, we're just going to call it the first positive day in a while. Okay. And if it's not greater than 0, all right, we're just going to put a 0 here. All right, now I'll copy that down. All right, so we can see basically at the beginning here, all right, the idea that it's going to go up and down sort of randomly is holding true, right? So we have an up day, a down day, an up day, a down day, and so forth. A few down days, then another up day. All right, we don't seem to have any runs, and there's a run of 3 positive days in a row. Okay, and if you want to get a quick hit of this so you can visually inspect the column without having to look at it too carefully, we can apply conditional formatting. All right, so I'm going to apply conditional formatting and data bars to give us an idea of when big runs are occurring. Okay. All right, so you can just kind of scroll back through the data and see where the bars are. All right, so it doesn't look like Priceline during this period had lots of runs of positive days. All right, we could do the negative days. All right, and I suggest that you do. I'm just not going to take the time here. All right, but it looks like the longest run was 6 days. So, you know, after you see, 2, 3 days in a row with Priceline going up, well, you might be able to bet that it's going to go the other way. Okay. And yeah, if you want, you can go ahead and take a look at, things like the average. All right, but I bet this is close to 1, and it is. Okay, and you could also look at the max. So, all right, how many days in a row did it go up? 8 was the maximum. All right, you could look at the standard deviation. All right, if you wanted to sort of use a statistical model to base, these reversals on. All right. Of course, it doesn't say anything about how big that move down will be after a move up. All right. Okay, I'm going to leave it there for now. It's a lot to have digested. I will put in some formulas for you so you can see what we did. Okay, so basically added these 3 formulas. And I will put those in there. All right, they're pretty long formulas. Okay, send me your questions.